Hi everybody and welcome to Smack the Markets weekly live stream. And I can ask you just to take a few moments just to read through the usual risk disclaimers. Make sure that you're comfortable with them. In brief there, just saying that we're not licensed to be able to give advice. So these sessions are not intended for that purpose. We're just going to be taking a look at the markets and expressing our opinions. And they're purely here for educational purposes only. So please make sure that you're comfortable with all of these terms. So, well, what a change around since we last spoke last week. So last week we didn't have an answer on the definitive answer on the US presidential election. Maybe we don't have now still. I don't know. It certainly looks like Mr. Biden is going to be the next sort of president, but it may not be an easy sort of transition. That's certainly what we're seeing at the moment. Morning, Michael. Morning, Gordon. Hi, Fergal. So the aftermath of the since we've had the election, and the election results have certainly been sort of quite interesting. I think everybody was looking at a possible election rally or an election decline, whichever way, whichever sort of side of the fence you were on. Yet it didn't happen until we got an excuse, maybe, of a virus, of a virus vaccine, which then sort of sent shockwaves through the markets. Now, that was sort of a little bit unusual to see that sort of sites move on the back of a vaccine development, and it was a fairly sort of significant vaccine development. But after further sort of investigation into the size of the move and what was sort of going on behind the scenes, it's sort of widely they come to the conclusion that this was more to do with unwinding of election positions as so much of a vaccine euphoria. And you can see that here if we take a look at the Dow. We just see the huge run that the Dow had on that day. And not only that, we've seen that there has been quite a sort of rotation that's sort of taken place since then of different sort of market assets and different sort of market groups. So namely sort of technology is sort of rolling off, and certainly money coming out of some of those stocks and markets that have benefited very well from the lockdowns, and funds are sort of coming back into some of the sort of more traditional markets and traditional stocks and companies that do better in normal times. And those are the ones that have been severely sort of punished through the sort of lockdowns. So quite interesting sort of moves that we've seen here. Now, the other thing that we've seen and picked up on the behind the scenes here is that a lot of these moves that we saw in a lot of the markets were counter trend. Now, this is within the context of this trend here on the daily time frame on the Dow, but for a lot of them it was the moves were counter trend, as we've seen in sort of precious metals and commodities and currency markets. And there was a lot of what actually sort of fueled a lot of this move here was stops being taken out. Coupled with that, there were a number of brokers that struggled with their platforms in order to be able to sort of participate in this or allow their clients to participate in this move as well. So quite a lot sort of going on there. Now, the interesting thing is that the market sort of came back and it's retraced back into sort of key levels here, finding support, and now we're starting to get a bit of a grind higher here. So if we have a look at the different sort of markets here. We've got the Dow here, which is looking like we're trying to sort of run to the all-time high again. The S&P 500 here, the sort of broader market, starting to really lag behind on the Dow. And if we look at the Nasdaq, is certainly the lagger at the moment, and there's been a lot of money sort of rotating out of the sort of technology stocks. So if we come back to the Dow here and let's come down to these sort of lower time frames, what sort of is a little bit alarming to me is the size of the candles and the size of the sort of strength of this sort of move as the market's sort of been moving higher. It is moving in the sort of right direction, but it's not an easy sort of passage for it. Having said that, the trend is still to the long side, and I think we could look at opportunities on this to participate in it. But we're really going to need to be down on these lower time frames and start to look at covering risk as quickly as possible. So I think the 60-minute time frame, not looking too bad at the moment. Fairly reasonable sort of geometry on here this morning. I would think there is, if we have a look at this, there was I think we sort of got some fairly sort of clear markets until we get up to this sort of recent high here, and then we got a bit of a decision point there. But I think the sort of path of least resistance here for the moment on the Dow is to the long side, but it's not going to be particularly easy, as we can see. So we'll keep this one very much on the intraday time frames opportunities list, and trade the sort of best trends that we can find. So let's come back here and have a look at the gold market, because on Monday we discussed gold, and we can see what sort of happened here. On Monday, the market was up here. We were looking at the market breaching the 1950 level and looking for the market to move up to the next level up here. So let me just highlight those with the sort of stronger colors. So the 1950 area is around here. We're looking for an increase higher, and of course the vaccine announcement really sort of took the money out of precious metal markets, and these have sort of come back quite significantly. Interestingly though, if we just have a look at this on the higher time frames, and take a look at this on the weekly, we can see that this is still just contained within this range. So price hasn't really sort of broken out to the short side. It's just come down to the bottom end of this range. So as long as we're finding support here around the sort of bottom end of this range, we might start to look for, again, steady increases here in precious metals. As I say, for a long time, I think that with the amount of stimulus that's being printed, that the pressure here really is for precious metals to benefit from that, and I think we'll see some steady increases to the long side on this over time. The big challenge for this, as these markets for traders, is of course they can be quite volatile, and as we've seen here. So I was looking here, and you know, in the trading room, I was looking for opportunities to see if we could look for plays to the long side on this. Gold, I'm thinking, is a little bit more on the challenging side. If we just come down the time frames and take a look at this on the 1 hour time frame, you know, we can see that we're in a a sort of consolidation here. There has been sort of higher lows forming in price, but not really getting out to the top side. And I think even if we started to get a breakout above these recent highs, then we've got the highs up here to contend with. So it doesn't really give us enough room for even equal reward to risk before we're then sort of hitting potential resistance again. I prefer the silver market. So let's have a look at silver. Again, it's come to the higher time frames. And with silver, we had a strong sell-off. It's come back in, but although the strong sell-off here only took out about 3 days of gains compared to about 6 days of gains on gold. And the market here on silver, as you can see, is still above, or it didn't even get down to the lows of this consolidation. So even from a trend perspective on the daily, what I see is higher lows forming here. High low, high low, higher low. And as long as the market can hold above these lows and continue to put pressure onto the long side, I think the price action here for silver technically is going to look a lot more easier for the bullish side. Now, again, if we come down the time frames, we can start to see price action here. Again, I think a break above these levels. I said on yesterday in the trading room, I said it was 24,600, didn't I? Was the key level there on silver. 24,600. So that was on the futures market. Let's just see where that corresponds on the cash market. So on the cash market, it corresponds with about this level here. So just at the high of this 4-hour candle here. So getting above this level here does open the market up for a bit of a trading window to the long side, and that is enough there to it's a big enough trading window to be able to get positioned in, and also to be able to cover risk, or should be enough to be able to cover risk, and look for positions to hold for a higher move. Even on the 4-hour time frame, we've got higher lows forming here as well on silver. Come down and we'd have a look at this on the 1-hour chart. Again, on the 1-hour chart, we've got higher lows forming here, which it's again just what I see here. Haven't got higher highs, but we've got higher lows forming. So so a silver for me is a wait at the moment. I don't have any sort of positions on this. I don't see a place to get sort of positioned on this until we sort of get above the 24 sort of 480, 24,500 on the cash market, or on 24,600 on the future. So the other market that we looked at on Monday was Kiwi CAD. And if we have a look at this on the 4-hour time frame, what we're looking for was a breakout to the long side. There was a we had our sort of level in here, as we can see, and price action, once it's sort of broken through this level, we're looking for sort of long opportunities up towards around that sort of 90 area, which actually the market has achieved now. So this has had quite a move. Now, of course, what helped this last night was the Kiwi economic news, and that sort of pushed all Kiwi markets higher. So the sort of thing that we might start to look for here, I mean, there's no sort of position here on these higher time frames. It's too far extended for me. But if we come down to the lower time frames, the sort of thing that we could start to look at is perhaps some sort of retracement, if we get a retracement in here. So let's run a fib study. So if we run a fib study from this point to the high, and again in here too, we can see that we've got a sort of cluster here of a 50 and 61.8% fib level coming into this sort of price point around 89 sort of ish, 89 to 90 through here. So this might be a good area here if we get a retracement, if the market does retrace back into this area. It's also back into the moving average zone here on the 1 hour time frame. So that would be quite a nice area to start to look for potential sort of longs if the market gets back in here. Then we could be looking at maybe sort of stops on either a moving average setup, so the momentum setup, or if we're looking for longer term plays, then we could be looking at stops behind these lows. Now I would probably be looking, I think, the more if I'm going to go for that route, the more conservative stop down here. So that would be underneath the sort of technical swing, because this doesn't really give us an awful lot of technical protection, does it? So yeah, I agree with you, Fergal. The Kiwi dollar. Let's have a look at Kiwi dollar. In fact, that's a good one. So now, of course, Kiwi is very strong this morning. The dollar index, again, it's starting to shine up as a bit of strength in the dollar index, but it hasn't been particularly convincing, certainly over the past few sort of trading sessions, has it? So if we do see weakness in the dollar, that's certainly going to help this market. It's going to help this market really move, in fact. Let's just have a look at this from a higher time frame perspective. So clearly got a long trend here, market sort of broken out. If we come down to the 60-minute chart and start to run our fib studies in here too, we've got a rather nice sort of area here with the breakout level on the 60-minute chart, sort of clustering with the 61.8% fib level, clustering with the moving average zone as well. So a pull back into this area also is quite a nice area for a higher low to form. And that would probably, let's have a look and see how that actually stacks up. That actually stacks up nicely, probably even better on the 4-hour time frame. So it'd be quite a nice that'd be a very nice setup actually on the 4-hour time frame. So again, if you've got markets that you're interested in or you're seeing and you'd like to take a look at, post them into the chat and we'll take a look at those as well. So thanks for that, Fergal. That's probably a much cleaner one than Kiwi CAD at the moment. So let's have a look at the euro dollar. Because euro dollar has just broken through that 118 level this morning. So this morning euro was particularly weak, and it's enough to actually take out the sort of 118 level. The market's pulled back to it now, but it's actually tested this a few times now. Let's just open this up a bit. Now, if we've got that strong dollar, if that could prevail, then that's really going to help to push this market lower. Now, this market is just fraught with ranges. Actually, if you have a look at this on these higher time frames, let me just zoom out of this a bit. As you can see, 119, 120, 118. There's levels all over the place on this, all contained within this range. So the one thing we can see, though, is that these levels are pretty well technically tested as well. So one level gets taken out, then we could maybe start to expect a move to the next level. So we have here on this particular market, we've got around 117. So I've got 117,500, 117, 116, 500, and 116. So literally every 500 pips, I've got a level on this market. I think the 117 is probably the stronger one, and that I think is the level for this market to go to if it's going to go. And you can see that we just find some real support in here at the moment. So let's just have a look, see what this price action looks like on the lower time frames. So just looking at this on the 1 hour, if we tightened up this level, so it tightens up with these lows here. It's not far off this low. Test this low here. You can see where price is at the moment. It's trying to push down. I don't see a setup on this yet, and there's quite a bit of divergence on this, as we can see as well, particularly on the MACD. So I think we'd maybe wait for this to see how this develops. If this has been too much of a quick move, maybe some sort of lower high in here might be quite nice, and then a lower low, and then maybe a break through this level and a pull back to it and a retest. That might be a bit more convincing for a sort of position to the short side. But at the moment, with the strength in these indicators, it's not looking too sort of confident to short this at the moment. So the euro, yes, the euro is weakening off this morning. So this could be something that develops to the short side. So we'll keep let's keep that euro dollar on the watch list today. So Aussie CAD. Let's have a look at Aussie CAD, Fergal. I knew you were talking about this one in the prep market prep this morning. I thought it looked pretty good then, actually, as well. Let's have a look at how this is. So one of the things I think that what I was looking at this morning was the Kiwis had the Kiwi across the board is pretty much overextended across the board, but the Aussie is almost sort of being dragged up by that, and but it's nowhere near as extended as the others, as the Kiwis. So the Aussies could be markets that'll be easier to play today. So let's have a look at this on the okay, so we've got some, certainly getting some moves to the high side here. If we come back down to that 4-hour time frame, we see the market sort of coming back in. Let's have a look at this on the 1 hour. This is looking pretty good. Okay, so we've got a reasonable looking setup here. Okay, so go down to the let's just have a look on this on the 15-minute chart. So it's quite nice about this setup on the, so nice setup on the 1 hour. And one thing that I'm a little bit concerned about is these highs up here, because if we come to the 15-minute chart, just notice this on the on my charts, we've got smack the market's pivot points at these highs here, and it's at the place where the market sort of tested 3 times, and there's a big pivot point there as well. So we've got a bit of resistance there. So let's just which might give us a bit of trouble actually getting through and having enough room to actually get to a clear to a 1-to-1 to get to that point. Let's see how that looks. It's going to be quite in fact, we're not going to be able to do it, are we? The it's going to be up here. So 1-to-1 is going to be up here, which is going to mean we need to clear that pivot, which has contained price 3 times here. So okay, not quite as clean as we first thought. Yeah, so I'm with you on that, Fergal. That's it's a shame the market's actually sort of tested this pivot 3 times now and rejected every time, and now made a low. So the 1 hour, the 15-minute chart not looking quite so clean here. The 1 hour looking sort of quite nice, but again, we still got these tests up here, which are, and then come to the 4-hour time frame. The 4-hour time frame is looking a bit stretched, but I would have given it that. Okay. Okay, so in actual fact, while we're on the Canadians, I was looking through the markets this morning, and I was looking through some of these sterling markets, and particularly the Great British Pound against the Caddy. Now sterling has been pretty strong lately, and I thought we might sort of see some sort of retracement back on some of these. Now the 4-hour time frame, if we could see here, looking sort of quite powerful. We've got a nice uptrend there. And this sort of trend was looking sort of quite reasonable on these sort of lower time frames. You come down to the 1 hour chart, you've got quite a nice trend starting to form here, with some nice geometry on that as well. And if we come down to the 15-minute chart, also looking sort of quite nice here on the 15-minute chart. So we've actually got just also we've got Smack the Markets pivots here. So right underneath, in fact, it's a little bit lower. It's actually here, just there. So right underneath price action at the moment, we've got a pivot point. Got quite a nice sort of 15-minute setup there. So again, yeah, we could actually sort of, I think we could probably look at taking something like this. Let's have a look. We're clear on news, aren't we? So pound is we haven't got overwhelming strength and weakness agreement, but it's not too bad. Not too bad. And in actual fact, it's looking quite nice there on the on these lower time frames. Okay, so that's a potential one for us. Maybe not. Look at that. What's happened? What's happened? Right, so trouble in Hong Kong. All Hong Kong pro-democracy lawyers are reportedly resign in protest against the ousting of 4 legislators. That's the only news that I can see. Some Brexit news coming out as well. I've turned my news feed off so that we don't get interrupted here. So Fergal, keep your ears out. Let me know what's going on there. Has there been an announcement of no deal? Here we go. EU and UK negotiations are said to be likely to miss the mid-November deadline to reach an accord on the new trade deal. Okay, that's what it is. Yeah, I can see that. Yeah, it's just come through on the text now. Goodness me. Okay, there we go. So let's come away from the Great British Pound for the time being. Yeah, so I mean, great cable. I mean, if we so someone suggesting yeah, so cables have got a big spike. We're going to see a big spike across these all of these Great British Pound ones now, aren't we? You know, pound you can see this pound yen as well, also pound Swissy, I should think. Yeah, so pound Swissy too. And this is just a really good example of why it's a good idea to avoid news announcements or trading around news announcements. The challenge is, of course, with a lot of these at the moment, with some of these very moving political things that are going on with Brexit and the US election, for example, they're not things that are regulated to be delivered at a certain sort of fixed time. They just sort of come out and they can catch traders unaware. So we need to try and mitigate as much as we can from this type of thing. Okay, so let's just see if we see anything else about that that news feed. So one of the other markets that I was looking at here this morning was the yen. So the yen's really quite weak at the moment, and I was trying to sort of figure out what markets might be better to markets to take advantage of a weak yen. So the Aussie yen was the one that I picked out of the bunch, and the main reason being is it looks better structure than a lot. We can see that the market's had quite a good run here. It's certainly sort of looking very strong right the way across the board. Again, it's a market sort of broken out of this sort of range now. And this was the challenge that I was looking at here. So it hasn't really quite broken out, has it? It's still contained within here, but you can see the sort of highs up here, and then we've got the sort of lows down here. So some kind of breakout on this, maybe some sort of breakout, some sort of pullback to it, to the level, that breakout level could start to look a little bit nicer on these lower time frames. But out of the choice of yen markets, I preferred this one. I thought this one had the sort of cleanest structure. If we come down to the 15-minute chart, you can kind of see here that we've consistently got sort of higher highs and higher lows forming here as well, and we're starting to get that breakout there again starting to sort of happen here too. So just sort of getting through this area. So again, this one is one that I'm keeping an eye on, mainly to see if we can get as a yen play, and see if we can get some sort of setup here. But the sort of thing that I'm kind of think would be the nicest here would be to wait for the breakout, look for the pullback, and then get a rebound off this level, because that would give us a higher low. If this level here was the higher low, if you follow my drift, we've got a low, we got a low, higher low, higher low, higher low, and then a higher low at the breakout. That would give it a nice move long. Okay. Goodness, let's have a look. See the time. Right. Okay, so let's start to wrap up. So if you've got any other markets that you'd like to take a quick look at, then drop it into the chat box, and we'll take a look at one last market. Otherwise, I think we've got quite a bit here going on in the markets at the moment. We'll keep an eye on the developments with the UK. So dollar yen, let's have a look at one last request for dollar yen. Dollar yen's going to... The challenge with dollar yen is that from a higher time frame perspective, it has been in a downtrend. It's sort of just got through that 105.50 area this morning. It's just underneath it at the moment. I think from an opportunity perspective, price structure is looking rather similar to the Aussie yen, and the reason why I preferred the Aussie yen to sort of dollar yen here was the sort of price action is a little bit more sort of cleaner, and particularly on the higher time frames. So it's still I think the Aussie yen is, well, all of these yens are, the yens are particularly weak at the moment. So all of these markets are sort of moving in the same direction. I think some of them are rather extended, particularly things like the Kiwi yen. And we need sort of pound yen's just seen a lot of volatility. But yeah, I think these could see a bit more advancement to the long side on these. Obviously, with dollar yen, we've got this resistance here to get through. And if you sort of look at the chart structure here, we've got resistance ahead on this, and we've got very divergence here on the indicators. So as price is rising up, we've got weakening here in the indicators. So okay, fantastic. Okay, thanks everybody. So we certainly hope you find it useful. Let's take a look at the get back to the trading room and see what's going on there, and we'll keep an eye on some of these developments. Okay, I certainly hope you found it useful and look forward to speaking to you next time. Marvelous. Thank you. Bye for now.